Okay, so I'm going to kick it off now. Thanks everyone for joining Skilled Nursing Facility Cost Reporting 101 with the Moving Forward Coalition, and more importantly with Betsy Rust, and I will introduce her in a second. We're so excited to have you here to continue our series of coalition conversations and to continue engaging with this wonderful community of advocates and providers and thought leaders and policymakers. It is just such a privilege to work with all of you. So a few housekeeping things, and then I'll introduce Betsy and the topic. First, we are recording this call. We'll post it to our YouTube. So, if you want to go back to that, reference it, share it with your colleagues, that will be online. Second, we will take questions as we go. Betsy will take questions as she goes to kind of help you all digest and process. Please post your questions in the chat and I will flag them for Betsy, and then hopefully we'll have some time at the end to have a little more free-flowing discussion. The last thing I would say is that Betsy has kindly offered herself to you all. You'll see, we'll share the slides at the end. You can see her email there. If you have questions for her afterwards, want to engage, please feel free to email her. And that goes for the coalition team as well. You can always contact us through our website or at our email info@movingforwardcoalition.org. So let's kick it off. I'm Isaac Longobardi. I'm the director. And this is a really exciting topic because it's really close to the work of one of our committees, Committee 3, on accountability and transparency. Early on in November or December, the committee was wading through the depths of what transparency and accountability meant for nursing homes. And they were talking a lot about cost reports. And one of the challenges was they didn't really know how to unpack them. There are these, they vary state to state, kind of complex, weedy documents. And they wanted to figure out what it would mean to read a cost report and really understand it. And so we were lucky to get connected by one of our steering committee members, Tina Sandry, with Betsy Rust, who is a real expert in the field. And she gave us this tremendous talk that really opened up these documents for us, made them, if not crystal clear, then on the road to crystal clarity. And we thought it would be great to share that with this larger community. So that's what Betsy is going to be sharing today. I wanted to briefly give you her bio. So Betsy is a senior care industry expert who has worked with providers across the continuum in advancing strategies and services for seniors. She is well known nationally for her ability to navigate the complicated world of healthcare reimbursement and to develop strategies and tactics to respond to economic, regulatory, and market influences. Her expertise also extends to operational improvement initiatives and financial feasibility, and she's extensive experience with skilled nursing facility transactions. Betsy has worked with numerous providers in developing and executing managed care strategies, including PACE, Program for All-Inclusive Elderly, and now my PACE acronym is leaving me. Yep. And ISNPs, Integrated Special Needs Plans. Betsy currently is the elected Associate Business Member President of the American Healthcare Association, serving a second term on the AHCA board through September 2023. So welcome, Betsy. Thank you for being here. And I'm going to kick it over to you for Cost Reporting 101.
Great. Thank you very much, Isaac, and good afternoon to all of you. I know from looking at the registration list that some of you are probably more familiar than others with the topic of cost reporting. And so, as Isaac mentioned, this is a Cost Reporting 101 session. So we would welcome your questions. And as Isaac mentioned, he'll take them through the chat, and I'll try to address your questions as we go, because I feel that that's often more helpful than trying to wait until the end and make sure folks have context as we go. So Understanding cost reports, as you might imagine, is a topic that typically takes more than an hour, right, to really do justice to the topic and to provide education. But understanding what the goals of the Moving Forward Coalition are, and the particular committee with which I am involved in, which is the Committee on Transparency and Accountability, I'm going to try today to help you understand what information is in a cost report, how it's used, and how we might be able to recommend making some improvements and enhancements to this tool, which will help promote the concept of transparency, accountability, and will help make improvements in nursing homes, which is, of course, our common goal. So one of the things I wanted to start by mentioning, you're going to hear me reference several times today, that while I'm going to talk a lot about the Medicare cost report, and the Medicare cost report is that federal cost report that all facilities who participate in providing care to Medicare beneficiaries have to prepare, the Medicare cost report. Each state can execute their own Medicaid system using cost reports and policies and payment protocols that they determine for their own specific state. So we have 50 states in the United States, and there are 50 different Medicaid programs. So we're going to focus today on what happens in Medicare, but I'll also highlight some of the important factors and opportunities that are used in some states that could be a best practice for all. On this slide, I wanted to offer participants today 3 additional links to topic areas that I think may be of interest. The first link is a link to a site in MACPAC, which is a Medicaid association that has some research with this first link that will show you basically a summary of how each state pays nursing homes in that particular state. The second tool is an information digest that's published by a company called Valuation and Investment Group. They do a lot of appraisals in the nursing home industry for banks and for others that need to have appraisals of skilled nursing facilities. And as part of that work, they publish a very robust digest that also provides information about each state individually, and it shows their certificate of need requirements, their cost reporting requirements. So it's a very good tool if you're looking to do some research on a particular state. And then the third document, there's a link to a document that was published by the Center for Health Policy Evaluation in conjunction with the American Healthcare Association, that is a summary of the 50 states in which what each state is doing in connection with value-based payment systems. So that's, again, something that might be of interest to many of you on the session today and to the committees as we continue to work and move forward with our work within the Moving Forward Coalition. So just some resources for you. So what services and costs are generally covered in long-term care reimbursement systems? So as I mentioned, we have Medicare and we have Medicaid. It's important to understand that within Medicare and Medicaid, even for those states that reimburse based upon the costs of a facility, there are costs that are subject to limitation, and not all costs are reimbursable. So we'll go through some of the differences and things that you should think about. So a second category of cost, the first category would be the routine room, board, and nursing care. And so typically those are, of course, included costs from the Medicare program and from all state programs. The second category of cost is ancillary services. So when individuals reside in nursing homes, they may have rehabilitation. They may also have need for things like laboratory, diagnostic services. Those things are covered by Medicare and are included in reimbursement by Medicare. Most states don't tend to reimburse for those items because they are covered by Medicare. And so for most states, those items aren't included in the reimbursement. So there are some differences. And then I called out pharmacy in specifically because when somebody is on a covered Medicare stay, typically the facility is responsible for paying for those pharmaceutical items while an individual is covered by Medicare. And when someone is covered by Medicaid, the facility is generally not responsible. And the state Medicaid agency has a separate arrangement for contemplating and paying for those pharmacy costs. There are also certain things that are really things that individuals expect to have when they reside in a skilled nursing facility: access to telephone, to internet, to cable, access to other services like private laundry services and other items. Those items typically are not covered by either Medicare or Medicaid, and individuals that stay in a nursing home are expected to cover those costs of those services themselves. And of course, there are some minor distinctions on that. So as we think about using cost report information to promote transparency and accountability, how do cost reports fit with other information that is available to the public and to stakeholders about nursing facilities? So I have it divided into 4 classifications here. So the first bucket is the CMS Provider Enrollment Chain and Ownership System. That is called PECOS for short. And this is a data set that CMS collects information about the owners of skilled nursing facility and those who are managing skilled nursing facilities. So that's the PECOS system, and I'm going to come back to that in a minute. We also have nursing home claim data. This is information that provides information in how individuals use their Medicare benefits. So which individuals have accessed services and used a Medicare benefit. The services in these first 2 buckets, the data in these 2 buckets is not data that is readily available to consumers or to researchers very easily. CMS governs this data, but it's not available to those who have interest in it on a readily accessible basis. Now, if we go to the right side of the chart here, we have provider cost reports, which is going to be the focus of our discussion this afternoon. And as I mentioned, a typical skilled nursing facility would file 2 cost reports. This Medicare cost report, it's uniform and applies to anybody in the US that provides nursing home services and gives coverage to Medicare. And then Medicaid cost reports, which each one would be different based upon the state that the nursing home operated in. Provider cost reports are available typically, but it's not a document that is easy to access. These documents are available under Freedom of Information rules that operate in each individual jurisdiction. So each state would have a different process in order for someone to access something that is available under Freedom of Information. So it's not something that typically, a consumer, for example, is going to be able to Google and find a way to access this information quickly. There is a third level of cost report, which we're going to talk about because it's something of significant interest, the home office cost report, because this cost report provides information on owners that own more than one facility. And in many states, the home office cost report also shows information on when a nursing home owner owns other businesses that provide services to those nursing homes. So we're going to spend a lot of time talking about that. And again, home office cost reports are accessible under Freedom of Information, but it's pretty challenging to figure out how to get that information currently. The bottom bucket are other items that are available to the public. And these are easier to find with a Google search. And so the first one, PBJ, that acronym is Payroll-Based Journal. That is the data that nursing homes provide directly from their payroll records that provide evidence of the amount of staffing that is occurring in each individual nursing home. Those files are available. MDS files, MDS stands for minimum data set. And those files are also key elements of those, not everything, because a lot of that data is private data that is secure under HIPAA privacy guidelines, but there are certain aspects of MDS data that are also available to stakeholders and those who wish to find it under a public search that is pretty easy to do with a Google search. And then the final category here, NHSN, is National Health Safety Network. And that is an organization that collects a lot of information around healthcare facilities. And during our period of the COVID pandemic, skilled nursing facilities had to increase their reporting to NHSN about cases and staff counts, et cetera, et cetera. So everything on the right-hand side is available to the public. Question.
A question just came in. What qualifies as a chain home office? Just because you file a home office cost report, does that mean you are a chain?
It does mean you are a chain because it means that there is some common ownership that is linking you together. There are a few organizations that manage nursing homes for other owners. If that organization is allocating some cost, they're required to put that on the home office cost report as well. So it really is required for any entity that's operating multiple facilities, whether there's common ownership or whether there is a management contract. And recently, CMS and Medicare intermediaries increased their level of, I don't want to say scrutiny, but they've been making sure that these have been filed, whereas I'd say a decade ago, there were a lot of organizations who may not have been filing this that should be.
Thank you.
So one takeaway on these data sets that I think is important, if you went out to Nursing Home Compare today, you would see the name of a nursing home that you're interested in looking at. Nursing Home Compare doesn't provide the facility's Medicare number on Nursing Home Compare. And so each facility that operates in Medicare has a unique number. The first two digits are the state, and then the other digits are the number of the facility. That Medicare number allows a researcher to easily match up data sets by linking that Medicare number for a facility. So it could make sense that that Medicare number be included as part of Nursing Home Compare, so that if you were looking at a facility, you would know what their number was, and then you could take that number and easily find them with a quick lookup on the payroll-based journal file, for example. Because as we all know, sometimes nursing homes do change names as a result of changes in ownership, and sometimes it's hard to even use the public sites that are available because the names have changed. This is just a summary of the schedules that are in the Medicare cost report. There are a variety of them, but we're going to focus today on the ones that are most helpful to transparency and accountability. So what happens in a cost report is that in the cost report itself, we are providing information on the utilization of the facility, who came to our facility, how many people came, who was their payer source, And then what did we spend money on in connection with their care? And because this is a nursing home cost report, we're going to go through some cost accounting and some allocations. And essentially, we're going to, when it's all said and done with the cost report tool, we're going to understand what is the cost of providing care per patient day, which is how we normally describe the cost of care in a nursing home, per resident day or per patient day. And that's different than how we would describe it, let's say, in a hospital episode, where typically that is per episode. We look at things per patient day in a nursing home. So when the cost report is all said and done, we're going to understand what the per patient day cost is of the nursing care itself. We're going to understand what the costs are of any specialty care that nursing home may provide, like if they have a ventilator unit or something special. We'll understand the cost of those ancillary services that they have to provide for Medicare that we were talking about, pharmacy, diagnostics, rehab. And then we'll also understand what category of expenses were non-allowable for Medicare purposes. And this is something that we're going to explore, because non-allowable doesn't necessarily mean not a legitimate cost of providing service. It's just something that's not typically been paid for by Medicare or Medicaid. And I'll give you some examples of that. So how often do providers file these cost reports? What is the role of them? So from the Medicare standpoint, they are a compliance tool that we collect financial and utilization information, including related party transactions. And that's something that's very important that the committee is interested in. The Medicare cost report has no impact on reimbursement rate setting. Our Medicare reimbursement is based upon clinical attributes of the resident. So we don't file this cost report and have it determine how much we get paid and settle up with the government. That's not how it works. We have what is called a price-based system, but we do use the cost report, and it is available for stakeholders to understand how the reported cost of the nursing home compares to the rates that are being paid. So it has a use in terms of oversight to stakeholders. It's a compliance tool for government and other stakeholders to understand what's happening in the skilled nursing facility. And skilled nursing facility owners and operators use the information to understand their own performance in comparison to peer nursing homes. It's very helpful for nursing homes to understand how their costs are trending and tracking to their peers, and similarly, who's utilizing their facility compared to others in the same market. Cost reports are typically due 5 months after year end for Medicare. It varies by state for Medicaid. And as we talked about, the access to this information does vary state by state. You'll hear me say that there are some Medicaid cost reports, some states that have more robust reporting of detailed information. And so that is something that, we are looking at in terms of the Committee on Transparency. Are there some best practices in some states that do require more robust reporting that we could recommend be a consideration to be included in this Medicare cost report that is uniform amongst all 50 states that would help with the issue of transparency? This is a very important slide, this one, to understand in terms of some of the structures and understanding how revenue and expenses of the structures is reported and how we need to take a look at it. So I have 3 different nursing homes, Facility A, Facility B, and Facility C, that are all owned by the same organization. And there may be variations between the ownership of A, B, and C, but there is some commonality, and they're operated by a similar management company. that home office, which we're calling the home office, and you'll see on the home office cost report when we get to that slide. Home office operations typically include the clinical and administrative oversight of the facilities that are being managed, and there may also be some salary and other related costs for employees that are deployed to multiple facilities. So in home office operations, we would be providing service to more than one facility. Now, within this situation, if we look at facility A, for example, one of the things that I think is confusing for some in looking at the structures of nursing homes is that often nursing homes will have a separate entity that owns the property from the entity that operates the facility. And so you might hear the terms PropCo and OpCo. So the PropCo, or the property company, owns the real estate entity, and the operating entity is referred to as the OpCo. Well, why would we have two separate entities? Sometimes they're exactly the same owners that own the property company and the operating company, and they have been bifurcated and separated into two companies in order to separate those for purposes of gaining financing. There are a number of nursing homes in the United States that have their loans through the Department of Housing and Urban Development. HUD, for example, would require the separation of PropCo and OpCo in order to obtain the HUD loan. There's also reasons for purposes of liability that owners may choose to separate PropCo from OpCo. And there also may be situations where the real estate and the operating entity aren't the same owners. So you have a different owner for the real estate entity. It may be a real estate investment trust. It may just be a group of different investors that aren't related, but you may have a situation where you have unrelated entities. So there are multiple combinations of what you might have, and we'll talk about whether or not those are reported in individual cost reports as we go. So if we think about the structure, so we've got, I'm interested in nursing home facility A. Well, now I might also want to understand, well, is facility A part of a home office? How would I know that? And then for facility A, does facility A, is it separate owners for the bricks and mortar versus the operations, or are they the same? So those are some of the questions I might be thinking. Then also, I might be wondering, do any of these facilities that are part of this, or for the home office, do they also own and operate other entities that provide services to facility A, B, or C? So that has been the focus of an area which many stakeholders have interest in understanding that. So I'm going to walk through and show you how you might be able to look for this information as part of examining a cost report. Okay, so this is one of the preliminary schedules in the S section of the schedules of the Medicare cost report. And in these schedules, you can see here that I list as an opportunity. In the Medicare cost report, we do not report the Medicare ownership in any detail. You're not going to see that as part of these questions here. And if you recalled in one of my opening slides, I told you that that ownership information was held in the PECOS database. Okay, so for Medicare purposes, somebody who files a cost report, owns a nursing home, doesn't repeat the ownership information here on the Medicare cost report. So that's a little bit of a challenge in that if you want to look at the cost report, you can't really check the facility ownership of the cost with the cost report. Now, there is some information on Nursing Home Compare. So again, that's one of the things we're looking at in our committee work, but on the cost report itself, we don't have the ownership information. On many state Medicaid cost reports, they have a pretty robust requirement for facilities to report that information. So that may be a recommendation that comes out of the work. Now, what is on here that is very, very helpful information and is already reported by facilities is whether or not the provider has had a change of ownership. That's up in this first section. So you can know, is this a new provider or not? So this provider answered no, they're not new. They didn't just buy the facility. In this second area, they're answering a question about whether or not they do have transactions with related parties, and they've answered yes. The third section is, are they part of a chain organization, and what is the home office's name? So I can look at this and it's very transparent. I can see it's not a brand new provider this year. They're alerting to the fact that they do have transactions with related parties and they do have a home office. So now I can see and go back and select the home office cost report. If I go back here, it tells me the name, Villa Financial. I could go ahead and submit and request this home office cost report under Freedom of Information from the intermediary that was listed. And I can now understand all the other facilities that Villa Financial manages. And they are all shown on this home office cost report. And so the home office cost report goes through a similar process as I'm going to walk you through on a facility cost report, and would show all the expenses and show how they get allocated to individual facilities. So there is a fair amount of reporting today that individual facilities have to do. The next set of schedules in a Medicare cost report deal with utilization. And when we say utilization, we're addressing how many patient days of care, how many admissions, how many discharges, how many full-time equivalents, and who is the payer source for those services. The ones that are listed today on the cost report are Title V, which really does not apply to nursing homes, Title 18, which is Medicare, Title 19, Medicaid, and a big category for other. There have not been significant enhancements or modifications to the Medicare cost report in numerous years. And I would suggest that there is a significant opportunity for improvement by recommending that this utilization area be modified to include data on managed care. We all know that managed care has increased significantly all across healthcare, and it would be important to be able to understand how much managed care does occur in this facility. And it's important from the standpoint, it's really kind of a global statement. Medicare and Medicaid are public programs, so we have lots of access to public data, but managed care, we take some private program, Medicare and Medicaid, and a public program, and we end up privatizing it by moving it to managed care, and then we have a lot less public information that we have access to. So it would be very beneficial to understand how much managed care was occurring in an individual facility. There are schedules in the Medicare cost report that provide very useful information on salaries, wages, benefits, and contract labor. This particular cost report was from 2021. And in 2022, there was a significant increase in the use of contract labor in nursing facilities in response to so many vacancies in positions in skilled nursing facilities. But so if you look at this schedule, the top part shows information on people that are employed, their employees. The owner needs to report salaries, paid hours, and average hourly wages. The owner also has to report how much contract labor was used. So this particular provider didn't use any temporary contract labor in 2021. And then the facility also has to report what was the spending for wage-related costs. This is the detailed schedule that provides the information on the detailed cost. How much that provider spent on health insurance, taxes, employee-related taxes, unemployment insurance, and other items. So there is a significant amount of information here that allows us to understand the labor costs in a facility. So in addition to the segment on the nursing facilities, the nursing workforce, there's also that same data provided for all of our other employees. Now, one thing I want to mention too, if I go back here, you can see for the nursing staff, I'm going to report the number of hours. There is an opportunity then to go back and reconcile these hours, for example, to the data that would be submitted on payroll-based journals. So that PBJ data is where a nursing home owner has to submit regularly with payroll the hours worked in their facility. And then those hours ultimately at the end of the year get reported here. So there should be an ability to reconcile these two data sources, which is good for those that are seeking information to be able to connect those two sources of information. And that's where I just was discussing that here. So on this particular schedule, you see the clinical staff actually broken out into position, RNs, LPNs, and CNAs. So that's what we have in terms of salaries and wages and contract labor, which is a fair amount of information for someone to take a look at and get an understanding about a facility, and again, could reconcile that to the payroll-based data. All right, this schedule is the statement of revenues and expenses, worksheet G3. So this schedule up in the top, we're showing what is our revenue, line 1. How much of our revenue is not paid because of contractual allowances, bad debts, discounts we pay to patients. And when I say contractual allowances, not all payers, the majority of payers wouldn't pay a nursing home their standard charge. They're going to pay something less. So we show our revenue minus our contractual allowances to get to our net patient revenue. We show our total operating expenses and our net income from service to patients. Okay, so this is a schedule where a lot of interested parties and stakeholders want to understand, well, what is the profit or loss from the facility? So up in this top section, we're showing the profit or loss before other income items. Well, what's included in other income? Other income would typically be our atypical items of revenue and expense. So this was a cost report from 2021. And during that time period, nursing facilities were receiving COVID relief funds from the Provider Relief Fund and other sources. And you can see for this particular provider, you can see the COVID public health emergency funding, pretty significant number, which changed the facility from a net loss to a net income situation for 2021. So stakeholder can go in, look at worksheet G3, understand from the top section, the income or loss from operations. And then if there are some special items, contributions or philanthropy, other grants, other sources, or special expenses that may have occurred in a particular year to understand the net. And so again, this is an area where I'm going to talk some more about in terms of connecting the information.
Betsy, another sort of question that the chat, a request to elaborate a little more on the gap in managed care data.
Okay. The reason why managed care data would be helpful, and I put it on here as well, is that managed care has been growing significantly. And many managed care entities, I'm not going to say most, although I probably could, pay less than what Medicare or Medicaid would pay. So if a provider is heavily reliant, first of all, we know Medicaid pays less than Medicare, right? So if a nursing home is taking care of a lot of Medicaid covered residents, financially, they're going to have less resources to do that because that's a lowered rate. But then if that state has shifted their program to Medicaid managed care, for example, what that nursing home provider gets is less likely than they would have gotten from the state Medicaid system. Sometimes it's the same, but often it's less. So it's hard to understand that if there is a trend, you're not going to be able to understand the trend because you can't look at the cost report and understand how much managed care is here, because maybe profitability is going to get worse. Maybe this particular nursing home has traditional government sourced financing. That is difficult to ascertain. From the nursing home's perspective, it's also very difficult because the nursing home wants to understand cost and revenue themselves because they want to be efficient, but they want to understand what other providers are doing. And you cannot access any of that managed care data under public sources the way you can government data. So hopefully I've answered that question, but if not, and if anybody wants to have a separate conversation about that, you can feel free, to reach out after our conversation today.
Thank you.
So this slide, what is important on this slide? So we showed you our expenses on the slide before. Now they're all detailed out by individual category and they add up to the total expenses we saw on that income statement, the 10.7 million. For cost reporting purposes, in this column, we summarize things that the provider has to remove from these expenses because they don't count for Medicare. They're disallowed for Medicare reimbursement purposes. So we're taking off $953,000. So on the one hand, you might be inclined to look at this and say, well, if 953,000 of this 10.7 million didn't count, is this provider really doing better than it says here because they're spending money on things that they shouldn't? Well, that's not what we're saying with this category. We're saying these are things that are disallowed for purposes of Medicare reimbursement. And it really is an important distinction. Now, it could be expense that doesn't seem like it would be appropriate in a nursing home, but there's so many expenses that are just things that Medicare or Medicaid won't pay for. And an example of that is provider taxes that are paid to a state. So most every state collects provider taxes. It's a tax. Some of that money is redistributed to nursing home providers. That's sort of a complicated topic, but the tax itself is not considered to be an allowable expense. So when I show you for this particular provider, we're showing 953,000 of disallowed expenses. A lot of it was that provider tax that doesn't count. But you might initially look at this and go, oh my gosh, spending a lot of money that isn't a legitimate expense. It's not necessarily the case. Other disallowed expenses, salaries over limits that Medicare or Medicaid has established. Okay, that one seems to make sense. If Medicare or Medicaid has established a salary limit for a particular type of position, and if someone's spending more than that, okay, that makes sense that that would be disallowed. Medicare also doesn't account things like marketing expenses, bad debt expenses. So if you have residents that don't pay and you have a bad debt expense, you can't get any recovery for that. And then there's also disallowances related to related party costs, which I think is something that this group is very interested in. So I want to spend the time on that.
And one other question popped up and I had missed it earlier. So going back a couple slides, a question about how do you define governmental appropriations? And is there anywhere that we can unpack the MISC line, the miscellaneous line?
The miscellaneous line, yeah, and I don't think this provider has too much on the miscellaneous line, but there's no further detail on that. But it could be something like, I think insurance, you know, if you get some sort of special insurance refund or something, but typically there's not going to be much reported on this miscellaneous line. Most folks are going to have a lot on this up in this area. There's big numbers in the last couple of areas down in this other line because of all of the pandemic funding. But prior to that, you wouldn't see too much down in this area. Okay, so on these disallowed expenses then here, so this is the detail of what was in that 953. This QAS tax, this is the provider tax that I was referring to. So that's a pretty big chunk of what this 953 is. But then also we have this adjustment resulting from transactions with related organizations, which is something we're going to dive into in detail right now. I want to make a point of saying each state cost report does, not every, but most state cost reports do something similar to this and have more detail. And so I would say a state like New York, a state like Michigan, where I'm from, there are several states where there's more robust reporting of this information. So oftentimes, the state Medicaid cost report is a better source. But again, is there an opportunity to make what is reported on this Medicare cost report more uniform to make it easier? Because this is something that everyone could get. So let's talk about rules regarding related party transactions. Related party transactions, providers are required to report them down to their allowable cost. What does that mean? Well, we're trying to understand, is there a profit factor if we're reimbursing based upon cost? And if so, does it make sense that Medicare would have to pay for that? So I have an example down here. So let's say I'm ABC Nursing Home and I have a medical supply company that I also own. And my nursing home pays my medical supply company $100,000 for supplies. My cost to provide those supplies is $75,000. So on the cost report, I'm going to show that the nursing home paid $100,000, but my cost was $75,000, and I would take away that $25,000 on the cost report. Okay. And I'm going to show you how that works. Now, there is an exception to this reporting principle. Let's say I'm the same medical supply company that is owned by the owner of the nursing home, but I supply these medical supplies to a very large population of health facilities. So the fact that I'm supplying to my related party nursing home is a small element of what I'm doing. If that's the case, And if what I'm charging my nursing home is the standard customary charge, meaning my $100,000 is what that nursing home could expect to pay if they bought from anybody else because it's a standard rate, then I wouldn't have to reduce it down to the $75,000 on the cost report. So for the related party principles, if that owner is really incurring the cost of only 75, I reduce it down, unless that related company is charging the same number to everybody else doing business with lots of others, and that is the customary charge. So if you think about it, the idea is I'm not going to penalize the organization that has brought some efficiency or economy to their own nursing home, as long as they're not spending more than what is the customary charge. So that is the premise of related parties. Now, I will tell you that, and I would say the vast majority of cases, you will see some amount reported for the difference in what the nursing home paid versus what the allowable cost is, but not in all cases. So let's take a look at how you would see this on the cost report. This is worksheet A81. And so on this worksheet, each nursing home is going to explain, here are costs I reported in my summary of expenses and what line item I reported them on. So let's take physical therapy. I had physical therapy expenses, and I incurred these from a related party. It's line 7 right here. If I go down here and look at line 7, for this particular item, this provider saying, I paid that related party company $195,115, and that's how much is allowable in cost. So I don't need to remove any. Now, if you look at this line item, line 3, for management fees or administrative and general costs, and remember, we were able to track for this provider, they had a central office. Down here, they're saying, I reported in my expenses $574,933, and what was allowable was $428. So this $146 I'm taking away as allowable expenses. So if we were looking at our cost report, if I went back here, remember this was the itemization of all the places where we made changes. That change with transactions with related parties flows through right here. So I do have the ability to go back and see what this particular nursing home is saying they bought from related parties, and whether or not there was a markup that I might want to consider when I'm thinking about the profit or loss of this particular nursing facility. Now, worksheet A1, an potential improvement opportunity is that there could be additional information provided here on who those related party entities were, because many of the states would use a similar approach, but would also ask the provider to elaborate on who these services were purchased from. So that's the related party section. Then in the next section, we have a summary that shows the actual cost per patient day. So as I described in my opening comments about how we're ultimately coming back to what is the cost per patient day, it's provided on this schedule, which gives us, now again, this cost per patient day is after I've removed all the things that are now allowable. So it's a barometer of what is the cost per resident day versus potentially what the charge is at that particular facility. This next section provides details on the cost of the ancillary services as compared to the charges. But these are for all payers, so we don't really have any detail here on were these costs and charges for Medicare, Medicare Advantage. And, you know, from the standpoint of the nursing home provider, again, I'd say the nursing home provider would be very interested in understanding more about the differences in managed care versus Medicare costs, because right now, a nursing home owner can understand costs under Medicare for themselves versus other providers, but doesn't have any way to benchmark themselves related to these Medicare Advantage.
So Betsy, I'm just going to flag, we have just a few minutes left, and I think you just have 2 slides left. So I think we're going to come out, folks, exactly on time, but we may not have time for a ton of questions at the end.
Yeah, and I think, and I'll stop, this one slide is one that I think is something that I know I've been asked about before, which I think is another area that folks would be interested in. So when you're looking at the cost report, we have Schedule G3 as the income statement, as I described. And I gave you some guidance on how to, you know, make sure you kind of look at it before you form a conclusion, whether it's a net income or a net loss. There's some things you have to take and dig a little deeper to understand the bigger picture that we just talked about. This other area, G1, is called the Statement of Changes in Fund Balance. And this is the area where if a nursing facility has an influx or a withdrawal, so we would have a new investor that would increase the equity of the business. We'd see that up in the additions section. But if the owner had distributions, we would see it in this deductions section. So if the owner was taking a distribution out of the company, it would be found here. And then finally, just another point here, that when folks are looking at this schedule, which is the balance sheet, so for those of you who are more finance oriented, this can be a little confusing to look at. You look at this and you're like, wow, this owner has no mortgage on this facility. They're debt free. Well, what you can't see here is that this information, this particular information, is for the operating entity. So back on my earlier slide, if this facility has a OPCO-PROPCO because they're financed by the Department of HUD, or if they have a separate REIT, you can't see that information here. So again, that is something that is challenging if you're trying to connect the dots. And most state cost reports would require more information on the landlord-tenant information that would help you connect that. So that's really the conclusion. And I'm sorry we are at time, but if there's any quick questions, happy to entertain them.
It's this office where I'm doing this engagement. It's a little shoddy in terms of cellular and Wi-Fi connection. So
I think that may be an accidental pickup. Betsy, thank you so tremendously much. I don't think everybody may not understand the magnitude of the feat of getting through all of that in an hour. So we will post a recording and share the slides for those who need to go back to it or want to share with colleagues, and Betsy's email is in those slides. So for those who are interested in carrying on the conversation with her, she has made herself available. Thank you all for being here. I'm so appreciative for your community and partnership in this work of making nursing home quality better. And thank you again, Betsy. This is tremendous to have this from you.
Thank you all.